I mean, isn't it fun? Are you guys not having a blast? I know our wallets are killing us. We're bleeding in the streets, but you got to admit, there's no more excitement, the adrenaline, the dopamine hits that we get 24/7. It's constantly going up, down, inside, left, right, outside, curveball, left, right. I mean, it's insane. It's really dynamic, it's active, and never a dull moment, that's for sure. And here we are today on Thursday, April 10. And thank you very much for signing in. I'm Stefan Roost. I'm here to talk to you about what's going on, Truflation and the Truth Network. If Truflation is where you find your data, the refinery for that network is in the Truth Network. And you need the Truth token to actually gas and feed that refinery. So here we are. Happy Thursday. And it's not happy right now because we've got a roundabout 180-degree turn again around tariffs. And the market seems to be really upset about tariffs dropping at breakneck speed again, or tariffs rising, but markets dropping as a result of the 145% tariff on all goods from China into the US. Man, definitely a roller coaster. After all other countries around the world got a moratorium for 90 days, China was loaded on with 120 and now 145. It's going to hurt a lot of companies, a lot of businesses. A lot of people are upset about that. But either way, today was inflation day. This is where, but at Truflation, as you know, every day is inflation day. And we try to bring that to you daily. So you have a barometer that you can follow and track in terms of how the economy is performing and what your experience is truly like when you go to the grocery stores, etc. So anyway, the BLS came out. I'm going to share with you. So I'm going to go over today 3 sections again, or maybe 2.5, 3. I'm trying to keep it dense, so I'm not going to talk too long. But we're going to talk about the CPI, government numbers. We're then going to go into what's next. How do you use Truflation? What do you leverage from that? Obviously, we've got to cover some of the tariff situation and what is really at stake right here. We have to finance and refinance $9 trillion worth of debt, and obviously yield, interest rates matter a lot. And so let's dig into it, guys. Let's just go deep and fast. So what did we see? We saw right up front, here we go, the lovely Bureau of Lagging Statistics. They came out, or the Bureau of Lying Statistics. Anyway, lagging statistics. So they come out a month later. They came out this morning at 8:30 a.m. Eastern time. They came and shared their CPI numbers. Now, just again, these are elite macroeconomists, sophisticated, highly educated individuals that really think that they are way better than all of us because they're a lot smarter, but they always get it wrong. Remember, these economists always get it wrong. I was watching a podcast with Niall Ferguson and Larry Summers at UATX, right? University of Austin, Texas. And they were talking there, and Larry Summers was going to possibly be the Federal Reserve or head of Treasury at some point. He wanted to charge more taxes. He was talking about as an example of Zuckerberg paying a bit more taxes, $12 billion. They all poo-poo the savings that we're doing in Doge. And then they want another 12 billion or 6 billion or 5 billion from individuals that have worked at their tirelessly hard-ass, sort of time and life, spending in sheds, on mattresses, in the bunkers, as they go to war and build their startups to become, finally, after 10, 12 years of sweat, blood, and tears, to actually get to a business that's generating revenue, and hit them with a 5 billion tax bill that actually doesn't even cover half a day's worth of government. And by the way, none of those tax dollars are actually making it to building better infrastructure, building better energy, getting more reliable goods, building out jobs, etc. Right? They just end up in somebody's pocket and in some NGO around the world, as we've seen throughout all these investments. Not saying that's somebody's opinion. We should be able to express those and definitely have a better debate around how better to allocate funds. And we are in experimentation phase. We are in the days of thunder. We've been talking about this for a long time. So we definitely need to buckle up. bloody hurts. And I don't know about you guys, but I'm sure all of us and everybody in this market is hurting. Um, and even if you get a heads up, we saw, I think it was maybe a week ago when Trump posted for the first time, this is the bottom, the worst is now behind us, so it was going to get better. Nobody, I don't know, did any of us make trades? No, I don't know. I don't know anybody that did. And then ultimately 3 hours before they actually announced the turnaround in tariffs, nobody traded, or people did trade. Maybe they did, but he announced it beforehand. So it exposed to a broader segment. It wasn't just private in your Nancy Pelosi room or a Chuck Schumer room or Elizabeth Warren's room. It was actually for everybody to be able to take that in and do with it whatever they wanted to do. Some people did do something, I'm sure, but maybe others didn't. But at least it was out in the public and it wasn't closed, and it wasn't private calls between the other representatives that we talked about and their private bankers and their traders and their exchanges. Either way, we're here to talk about inflation. Sorry, I'm digressing a lot. But ultimately here, you can see CPI. And I just want to highlight this. Again, this is why I got into my diatribe. But coming back to here was really around the CPI. Listen how this sounds. I mean, and try to make sense of this. CPI falls for all times, falls 0.1% in March. Remember, it was 2.8%. They've come in at 2.4%. So where do they get the 0.1? They look at month-on-month comparison versus year-on-year comparison, right? So compared to the same time last month, it dropped 0.1%. Gasoline declines really drive everything, obviously. Okay, gas is the biggest driver, and that's why we have drill, baby, drill, right? And if you go to index.fund, check out Drill Baby Drill Index. You can create one as well. That's why we build all of these data sets. There is no other RWA chain on the market other than Truth Network with all of this data available for you on the Truth Network. So go check it out. And you can build your own index on index.fund using the Truth Network data sets where you have consumer prices, RWA prices, etc., all available there. But coming back to this article again, I still haven't moved beyond this page. Can you believe that? But I'm so struck by how bad this is written. In March, the consumer price index for all urban consumers fell 0.1%, seasonally adjusted. What does that mean? And rose 2.4% over the last 12 months, not seasonally adjusted. Okay, what? So basically what they're saying is month on month, 0.1%, which is what the headline is, and then rose 2.4% over the last 12 months. In essence, all decisions are made on year changes. So I don't understand why they're doing the 0.1. That's the headline. It should be 2.4% last 12 months, dropped by 0.4%. That's huge, right? And that is ultimately the headline that everybody has been retweeting, talking about. Why don't they just be straight with the audience, instead having some long-term convoluted misperception and confusing, confusion created terminology. The index for all items, less food and energy. Again, they take out food and energy, right? The most important categories increased by 0.1%. So, okay, you don't need food, you don't need energy, but prices have increased 0.1%. Why? Because ultimately, energy and food are very volatile, so they want to take that out from the volatility capability and then be able to see where the markets are going if you extract volatile elements. And so they believe that's a better indication of how prices are evolving, and that ultimately will impact the interest rate decisions, right? And that comes up May 7th. The FOMC comes together, and we're going to do a really good podcast together with some really cool individuals. So we'll be sharing more about that with you over the course of time. So stay tuned, subscribe, like, follow, sign up to our newsletters. You know where to go. If you're not already here, but we're just trying to bring you more insights, more details, and share with you a lot more. Am I live? Am I live? Yeah, I should be live. Anyway, I don't know. Anyway, that was that. Yeah, so I just wanted to share that with you. And I, I mean, you've been following Truflation. We don't believe those numbers. Those are lagging numbers. Remember, they go back they go back. They capture these manually. They use 60,000 items versus all of the data sets that we track. And so we try to report to you ahead of the curve, right? And what you know is that inflation is actually 1.34%. This is year on year again, right? So kids, this time last year and compared, same time today, price appreciation compared to the same time last year, so 10th of April 2024 instead of 2025, is up 1.34%. Yeah, people also love our eggflation. I don't know if you've seen the eggflation calculator, but yeah, if you go to eggs, you can see here, look at the eggflation calculator, and this resonates with, this is our one single item that we track, and we will have more single items with multiple price feeds that we will be tracking on Truflation. So you can actually, eggs, a dozen. Do I pay $6.15 for a dozen of eggs when I go to wherever I'm doing my grocery shopping? Yes, no. If no, Truflation's not accurate. If yes, wow, that's pretty accurate. That's in line with where we're at. Give us a deviation, right? Give us 10, 20 cents deviation. I mean, obviously, if you go to Whole Foods, it's going to be a bit more expensive than if you go to HEB or somewhere like that, right? So just bear that in mind and take that into account. But if this is an accurate reflection, and everybody we talk to, when we show the eggflation index, they get a better representation and they believe this is an accurate number. You can also see this, not right now, but it's going to be live on our Explorer when that comes. Who are the data providers? Nielsen, Numbeo, BLS, and the USDA. So we're getting 4 sources of price feeds for you to complement that of the BLS, right? So we just always want to work with the BLS. We like the Bureau of Lagging Statistics. We wish, and we have proposed to them to be able to work with them to make sure that they can get the data in real time. Anyway, that's sort of what we've got. And again, just to highlight what's going on and what people are talking about, the mainstream media, I don't get them either. I mean, here you've got Anna Wong from Bloomberg. I mean, all the financial institutions and financial traders, they all have a Bloomberg terminal in front of them, which they pay $2,000 a month for the basic subscription for one single terminal. So if you've got a trading desk of 10 different traders, you're paying $20,000 a month just to get access to this terminal that gives you the data. Truflation is doing this for only $49 a month without any discount. If you get it annually, you're going to get a 20% discount, so $39 a month. And then if you stake your Truth tokens, you actually even get less. You get another 20% off, and you do it annually, right? And so you get all of this ahead of the time. And why is this so valuable? Because when you get Truflation data, you get a 45-day lead time. 45 days, guys. You can actually predict where the government's going to go. And what do you do with that? You can actually make money with that competitive advantage. A lot of our customers are trading off this data. What are they trading, right? We've shared with you the Bitcoin. You could trade Bitcoin off the back of this. And it's not, you have to find the right timing. You have to do the research. We're just giving you the tools and the insights to make your own decisions. But when we do technical analysis, this is the outcome that we see. Where is Bitcoin headed next time? Off the back of the signals that Truflation is giving you. If you look at the signals, we've done detailed analysis. Subscribe to our newsletters. You get this ahead of everybody else. 45 days, you know where the market's going to go, number one. Number two, you can do technical analysis and you can work with our analytics team to be able to understand how to interpret that technical analysis and then make your own decisions whether you want to go in or not. Here you can see, you can find late signals. You can see, I mean, you read this. I'm not going to read this all to you. Sign up to our newsletters. You get this information first. Not only that, we also share with you other opportunities. We've talked about how it impacts the dollar, the valuation of the dollar associated with a basket of other items and other assets. And here you can see The BLS is nowhere in the curve. Stockholm University has done a whole study on the value of real-time inflation metrics as a competitive way to compound growth, to make investment decisions, leveraging real-time data sets. And that's what we try to bring to you. And it's powered and refined by consensus algorithm Roadrunner, which is on the Truth Network, and SQL databases that anybody can build applications on. Anybody can build an index using SQL smart contracts on the Truth Network to then be able to build your own predictions, your own indexes, and your own interpretations and technical analysis if you integrate this into your preferred terminal of choice. We've been talking to Bloomberg. They're too big, they're too slow, they see us as a threat. We've been talking to other providers. You watch, you wait, you will get this data in those platforms and be able to work and do your own technical analysis and be able to compare what we're doing. You're already seeing GMI, Raoul Pal's global macro index, right? So, or investment, they're actually got Truflation baked in. You've got Andreas Steno Larsen already baking Truflation into their calculations. Do you want to be behind the curve? Do you want to be up at that level with these investors? That's how you need to work with, and why you need to work with Truflation data. So here you can see, so going back, sorry, I'm digressing, but here you can see trends. When we peak, Truflation drops, the yield starts to drop on the 10-year bond, right? And so we have actually assessed that and looked what that looks like. And here again, Andreas Steno Larsen, super smart, again, global macro fund, right? So he's the CIO of a global macro fund, and he works with Truflation. Really happy to be working with him, and hopefully we can get him on one of our spaces coming up soon at the next BLS report. We've asked him, let's see if we can work, and he's joined one of our spaces before, so let's get him on again. But here he talks about, again, back 23 hours ago, he talked about if this chart based on Truflation proves to be just barely right, it will be one of the single most contrarian investment cases in financial markets in newer history. The jury's still out. So again, we don't have hundreds of years of legacy and analysis, but we do have 4 years of being in this business and really innovating. We are a set of entrepreneurs hustling and working for you to be able to bring and educate the market, number one, about Truflation and other indexes and other data sets. And so this is how we're doing it. And look, he even comes out again, this. So he's headlining this, and maybe people are taking a small side bet on if this could be true. This could actually be a significant game changer. Let's check that out, and yeah, take a look at what that is. But not only are smart people like Andreas and Raoul Pal working with Truflation, you can also see Anthony Scaramucci with Skybridge. He has been a super supporter of Truflation. I did a great podcast with him. Have a look at it, check it out, go to YouTube, follow, like, subscribe, sign up, do what you got to do. But this is where we're going to try and continue to bring you alpha first, right? And insights and educate. This is what we're about, right? We're really here to help everybody scale, learn, grow, and take democratize economic data for everybody to be able to access. So that's sort of, check that out. I won't go into that too much, but yeah, you can check it out. That's sort of it really around Truflation, the Truth Network, the Truth Data, and obviously everybody's really concerned about tariffs, right? We've seen this roundabout turn, tariffs growing for everybody around the world. Yesterday we saw a 90-day moratorium, and then boom, 145% for China. The markets turn again, right? We were all green yesterday, super happy, and now we're back. And what are we seeing here? We're seeing that what has happened over the years, and why are we having this negotiation around trade? Number one, we have $37 trillion worth of debt. we have interest payments in $1 trillion. We have $1.3 trillion worth of trade deficit. We're importing way more than we can afford. And imagine if you did that as a household and your bank was just there and giving you more money and saying, oh, by the way, the loan that you took out 10 years ago is up for renewal. And today's interest rates are 4%. 10 years ago, they were zero. We were living in the ZIRP days, zero interest rate days, right? Those were the zero interest rate days that we were living at. I could borrow at, not $10 trillion at that prime price point, right? And now look at what that needs to get refinanced, right? You're seeing over here this $10 trillion. I need to refinance that. All the meanwhile, I have an OPEX that is killing me. I'm losing global trading business. The system is no longer working for the US. And so why is the US and Trump trying to change this, for which he's been talking about for 40 plus years, by the way? So if you go back and watch his Oprah Winfrey interview, he's talking about trade deficit, trade barriers, difficulty to enter into new markets. At the time, the US, the belief was we got to help everybody elevate and get out of the challenges encountered in those markets. How can we share the prosperity across the US into other markets? That has changed. Look at this. China is really dominating. And at the same time, you cannot sell products into China. Even the Germans can't, the Europeans can't, the Russians can ultimately, but Japanese can't. I've lived in China. I set up businesses in China. I know how difficult it is. So let's just have zero rate trade. Why can we not just have trading between all the countries at zero rates and adopt a global policy? We need global regulation. Why? Because everything has moved online. The hackers have moved online. They are global. They're hacking you from North Korea. How do you go after them? What jurisdiction falls into? Whose jurisdiction do they fall under? How do we manage all of this, right? So it's really challenging to do that and to manage that. That is what the world is encountering. That is the change that has taken place. And very much like we built Truth Network and Truflation, was because none of the systems have changed for 100 years. The change is now coming to global trade and to all global partners. And why not? And I think, who's talked about it really well is Chicken Genius. Follow Pack Chicken. He's got a lot of good insights. You want some alpha? He has a lot of alpha, right? He did an amazing report on robotics and humanoid robotics, right? So check it out. He's got a good breakdown, good insights, really good. Follow Pack Chicken. But anyway, what does he say here, right? There wasn't any 4D chess or any of that nonsense. So again, mainstream media talking about all these complexity and conspiracy theories. Funny how mainstream media hated conspiracy theories before, but now they're concocting all of these conspiracy theories. But now it's pretty clear this administration, it operates really simple. It's just a business, right? Push it, break it, repair it, right? Move fast, break things, right? And at David Sachs at the crypto summit in the White House expressed it really well when he was sitting at the table and he was saying, the government is moving at startup speed. So if an organization that big is moving at startup speed, what does that mean for us as startups? We need to be moving faster because we're here to disrupt the institutions. And if the institutions can't keep up and the government is moving at breakneck speed, startup speed, can we take advantage before the big institutions can actually move into this market? Can they move fast enough? Do they have too many impediments in the way so that they cannot move? That's where it is our time to shine. They shut down the crypto regulatory body or something, right? So they've actually shut a lot of these things down. But anyway, it's really, he's operating it like a business. Push it, break it, repair it. And Peter Levels, who launched the deadlift index, even better. Trump is vibe president. I mean, take that in, drink that Kool-Aid. That's really what it's about. It's about vibe presidenting, right? So that's really the new terminology. That's what we're up to right now. And follow those individuals. Always interesting. always got some good insight. But really, this is the big challenge that we have right now in front of us. We've got $9 trillion to be refinanced, and they need to be placed in these years. How much and how expensive is that refinancing going to be? Is it going to be at 4% if it's coming from 0%? Why? Because ultimately, think about it, it's your credit card loan. You want to roll it, or your mortgage. You got your mortgage out 10 years ago at 0% interest, or 1, 2, 3%. Now you got to refinance that mortgage. 10 years is up. That one's coming due, so you need to get out a new mortgage to pay off the older mortgage and then maintain the ongoing payments. At the past time, you were paying, maybe $1,000. Now, with interest at 4%, you're going to pay $4,000. Do you want to do that? Not really. Maybe you're only going to pay $2,000 because it's double as expensive as it was before. Now you've gone through Doge. You've cut all your OPEX. You've now put tariffs in place. You've got new sources of income. You've now built out a lot of capability to actually export products as well as manufacture in-house. So ultimately, you're generating more income from tax. All of that goes to waste because you have to pay yield on, or interest rates on, the new loans that you've got. So you don't want to do that. You want to try and keep this as low as possible so that you can actually refinance that. That's really what's going on right now. So yeah. That is what's going, and what is the yield curve doing? So you can see here, down in, let's see, I'm going to share this to you. Here we've got a 1 week breakdown of with our partner. We work with investing.com, as you know. We work with a lot of their data and integrate that. So they have an amazing, nicely prepared, simple graph that anybody can see. Look how clean this looks. It's interpretable. Everybody can work with this. So here you go, right? Where's the yield at? So can I zoom into this part? Oh, whoa, here we go. I want to zoom in to the detail. Yeah, so here I can zoom in. So this is the funny thing about yield curves. You have a loan, $100, and you have an interest rate tied to that loan. People will sell this into the market, which means there are more bonds in the market. And so then in order to get cash, if I'm selling it, there's more supply of bonds. So in order for people to buy it, the yield has to go up so it becomes attractive that people want to buy it. So contrary to what belief is, that's the way you got to think it. So people are selling it. That means yield prices will go up so that there are more buyers in the market. And yield is, again, $100 multiplied by interest minus the nominal value of that $100. So what is the par? The par is 100 and the other is below par. So that's really what the metric is here. And that's, whoops, I haven't even been sharing this tab. I've been on the old tab. So here you can see how all of a sudden somebody is selling in the market. And the rumor has been that it was China or Japan. Is it really China or Japan? Because they're sitting on billions, hundreds, maybe $1 trillion each, right? Japan, I think, sitting on 1.3 trillion. China's on about 1 trillion or 900 billion, something along those benchmarks. And so now, or is it hedge funds that are having repo calls? That's the other part. Oh, pension funds that need to pay out. They don't have the cash at hand. They need to find cash, so they sell it into the market so that they can get cash and pay out their bills, pay out their dues, pay out pensions, pay out insurance claims, whatever it might be. That's how this works. And you cannot afford necessarily to wait till maturity when you get 100. You have to give it at a discount in order for people to buy it. So the yield becomes better because the nominal value, the par, is lower than the par value. Anyway, so that's the challenge in front of the refinancing. And what is turning out is this interest rate, the yield rate, is more important than the Fed rate. So people are beginning, because the Fed takes 2 months to come together and decide on interest rates, then that's so slow, so inaccurate. No, you got too late. They're using lagging data from the Bureau of Lagging Statistics. They're using other economic data that is equally lagging, built on systems that are over 100 years old, like our global trade system. And now They are making decisions, and the market just doesn't buy it anymore. Who do you trust? Where do you go for your truth? Do you go to the BLS or do you go to Truflation? You tell me what is and where is the truth. So on that note, have a happy Thursday. It's going to be a rocky ride. We said 100 days of thunder. We still are not quite 100 days in, but it's going to come very soon to an end. I think we've bottomed out. It's now, let's get to the table. And if Trump has called Xi the way he said he has, or has put up the proposal to meet anywhere to discuss and negotiate, let's see if that happens. That will then bring us a whole new green light. Stay tuned. Are you following him on Truth Social, or are you following somebody reposting his posts on Truth Social in Twitter? Maybe there's arbitrage opportunity between those two. Anyway, Richard Trevor, can you drop some Truth Alpha, please? I hope I did already, man. Yeah. So if you haven't, stay tuned, like, subscribe, follow, listen, to the newsletter as well as to us on Twitter. You'll get alpha. We share a lot of insights, and we do it for you guys. And Juleno Singer, send some truth. Yeah, sure. We don't just give out truth because it covers for gas, but happy to, if you're a follower and a subscriber, happy to have a look at what we can do with the community to be able to access data. We are already super valuable. If you stake some truth, you get all our data, not for free, but you get it at very good rates. I'm using Truflation to make some trades. Their inflation data is accurate. Thank you, Juleno. I'm glad you think so. We think so. And we bet on it. And we do our trades associated with it as well. So thank you, everybody. Have a great weekend. Let's hope it doesn't get as bloody as we've seen. But I will be on a couple of podcasts coming up. We've got some more podcasts that we'll be sharing with you. You've seen the Scaramucci one. Listen to that. That was fun. And have a great weekend. See you for now. Bye. Bye, everybody. Bye-bye. I'm not sure if I'm still playing or not, but here we go, uploading. Wow, I'm super far behind. 2 seconds until uploaded. Oh.